The most important marginal thing in the world is the Chinese economy. So far, decade to date, China alone has contributed just less than 50% of all the change in global GDP.
Half the world's
Nearly
GDP.
Half. And
in what time frame, Jim?
Since 2010.
So in the last 8 years, according to your numbers, China has contributed half of global GDP.
Yeah, the US and China together, 85%. And most importantly, more and more of what's coming from the Chinese in that regard is its consumer. I often say to people, America's most iconic modern company, Apple, for 3 years it's sold more iPhones to Greater China than it has to the US. So ultimately, if the US takes genuinely this kind of belligerent stance, it's going to be the US's best growing companies that will suffer. By coincidence, today in a very prominent newspaper, one of the most famous US-based iconic tech investors, Mike Moritz, Sequoia, was writing lyrically about how much they and others invest in Chinese tech these days. You know, the US...
That's why we're seeing the Shenzhen index, which we don't talk about that much. It is the third index, but it's basically the NASDAQ of China. I think that's a fair way to say it. Down nearly 6%. What is the let's do the best and the worst case outcomes. The worst case outcomes for global GDP is what, Jim?
If this is for real, as I just said, since the start of the decade, 85% of all global GDP comes from these two places. And the rest of us sort of hang off what's going on it. So if this carries on, the markets, you know, I tend to be one of life's optimists. But if this is something that's got more legs, the markets are right to be concerned about it.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.